Hey, what's going on, crypto people? This your boy D Crypto Siege with another day in the life and the crazy life. That is a digital asset space. Good evening, guys. Happy Sunday to you. Wow, absolutely crazy news today. So, guys, listen, this is your XRP Ripple Daily news, excuse me, in 0 to 10 minutes. Let's do this. So, the Federal Reserve, excuse me, Federal Reserve cuts rates to 0 and launches massive $700 billion quantitative easing program. This is from CNBC.com. Wow. Federal Reserve cuts rates to 0 and launches massive $700 billion quantitative easing program. Guys, it is upon us. And if I said it once, I said it 1,000 times, that Donald has a plan. And he's getting what he wants, is what it seems like to me. So, key points. I'll go over the key points. In an emergency move Sunday, the Federal Reserve announced it is dropping its benchmark interest rate to 0. Do this on the Sunday. Gotta think what's going to happen to the markets on Monday. Benchmark interest rates to 0 and launching a new round of quantitative easing, a new round. The QE program will entail $700 billion worth of asset purchases, entailing treasuries and mortgage-backed securities. Mortgage-backed securities, doesn't that have to do with the banks? Markets responded negatively with Dow futures pointing to a drop of 900 points when the market opens Monday morning. Interesting times. And I'm wondering, what do you think they're going to blame it on? What do you think is the deflection? What do you think is the deflection? All right, so here's Jerome Powell. Federal Reserve Chair Jerome Powell holds a news conference following the Federal Open Market Committee meeting in Washington. Oh, that's the old picture. That's 2019. So anyway, so here it is. The Federal Reserve saying the beer cold outbreak has harmed communities and disrupted economic activity in many countries, including the United States. Cut interest rates to essentially 0 on Sunday and launched a massive $700 billion quantitative easing program to shelter the economy from the effects of the beer cold. The new Fed funds rate, used as a benchmark both for short-term lending for financial institutions and as a peg to many consumer rates, I'm guessing, will now be targeted at 0 to 0.25, down from a target range of 1 to 1.25. So essentially down to 0. Yeah. Facing highly disruptive financial markets, the Fed also slashed the rate of emergency lending at the discount window for banks. The banks getting their share by 125 basis points to 0.25 and lengthened the term of these loans to 90 days. Despite the aggressive move, the market's initial response was negative. Futures pointed to a decline of some 900 points at the Wall Street opening Monday morning. The discount window plays an important role in supporting the liquidity and stability of the banking system and the effective implementation of monetary policy. Supports the smooth flow of credit to households and businesses, a separate Fed note said. The discount window is part of the Fed's function as the lender of last resort to the banking industry. Institutions can use the window for liquidity needs, though some are reluctant to do it, as it can indicate that it can indicate that they are experiencing financial issues and thus sends a bad message. The Fed also cut reserve requirements for thousands of banks to 0. They cut the reserve requirements for thousands of banks to zero. In addition, in a global coordinated move by central banks, the Fed said the Bank of Canada, the Bank of England, the Bank of Japan, the European Central Bank, the Federal Reserve, and the Swiss National Bank took action to enhance dollar liquidity around the world through existing dollar swap arrangements. The banks lowered the rate on these swap line loans and extended the period for such loans. Fed Chairman Jerome Powell is scheduled to hold a press conference via telephone at 6:30 p.m. Eastern Time. Yep. Shout out to Ponder John. He actually shared that on one of his tweets if you guys want to check that call out. The actions by the Fed appear to be the largest single-day set of moves the bank had ever taken, mirroring in many ways its efforts during a financial crisis that were rolled out over several months. Sunday's moves includes multiple programs, rate cuts, and QE, but all in a single day. All in a single day, guys. So here's just some of the articles from the Federal Reserve. So this is one here. Federal Reserve issues FOMC statement. The beer mug or beer cold outbreak has harmed communities and disrupted economic activity in many countries, including the US. So more recently, the energy sector has come under stress. On a 12-month basis, overall inflation and inflation for items other than food and energy are running below 2%. Market-based measures of inflation compensation have declined. Survey-based measures of longer-term inflation expectations are little changed. So, global financial conditions have also been significantly affected. Available economic data show that the U.S. economy came into this challenging period on a strong footing. Information received since the Federal Open Market Committee met in January indicates that the labor market remained strong through February and economic activity rose at a moderate rate. Job gains have been solid on average in recent months, and the unemployment rate has remained low. Although household spending rose at a moderate pace, business, fixed investments, and exports remain weak. More recently, the energy sector has come under stress. So, consistent with the statutory mandate, the committee seeks to foster maximum employment and price stability. The effects of the beer cold will weigh on economic activity in the near term and pose risk to the economic outlook. The deflector, that's the deflection right there, the beer cold. In light of these developments, the committee decided to lower the target range. I read that, we already know they lowered the rates. The committee expects to maintain this target range until it's confident that the economy has weathered recent events and is on track to achieve its maximum employment and price stability goals. This action will help support economic activity, strong labor market conditions, and inflation returning to the committee's symmetric 2% objectives. Okay, so here's the news from the Federal Reserve, Board of Directors of the Federal Reserve System, coordinated central bank action to enhance the provision of US dollar liquidity, guys. Guys, how many times have we said on this channel? The global economic crisis has zero patience and waits on no one. And the global economic crisis is illiquidity. So, you know this already, the Bank of Canada, the Bank of England, the Bank of Japan, I read all those banks, announcing in a coordinated action to enhance the provision of liquidity via the standing US dollar liquidity swap line arrangements. These central banks have agreed to lower the pricing on the standing US dollar liquidity swap arrangements by 25 basis points so that the new rate will be the US dollar overnight index swap rate plus 25 basis points. The OIS, overnight index swap rate, plus 25 basis points. To increase the swap line's effectiveness in providing term liquidity, the foreign central banks with regular U.S. dollar liquidity operations have also agreed to begin offering U.S. dollars weekly in each jurisdiction with an 84-day maturity, in addition to the 1-week maturity operations currently offered. These changes will take effect with the next scheduled operations during the week of March 16th. The new pricing and maturity offerings will remain in place as long as appropriate to support the smooth functioning of U.S. dollar funding markets. The swap lines are available standing facilities and serve as an important liquidity backstop to ease strains in global funding markets, thereby helping to mitigate the effects of such strains on the supply of credit to households and businesses, both domestically and abroad. Interesting times, guys. Very, very interesting times. I hope you guys have a chance to go over some of these articles. Very, very interesting times. It looks as though things are playing out as planned. And I guess we'll see. We're really going to start to see next week what's really the ultimate plan. I believe we're going to see that next week. All right, guys, listen, I'm going to wrap up this video like I do all my videos and remind you of this. Old money doesn't want you to win. They don't want us to win. They would rather us remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it. I'll talk to you soon, guys. See ya. Bye.